In lockstep with the U.S. rate cut, a number of major banks in Hong Kong reduced their best lending rates by 25 basis points. The move is expected to ease mortgage burdens for borrowers.
Following the Federal Reserve's rate cut overnight, a number of major banks in Hong Kong announced trims to their best lending rates by 25 basis points. Over these 2 months, Hong Kong's major banks have slashed their prime rates by a total of 50 basis points. How much money can mortgage borrowers save? If you bought a residential property at $6 million on a 90% loan-to-value mortgage over 25 years, the real interest rate was reduced to 3.875% last time, with the prime rate lowered by 25 basis points. That means borrowers can pay about $700 less every month. With today's further reduction of the best lending rate to 3.625%, another $700 of interest payment can be avoided, so the monthly repayment tapers to about $27,000. Will the rate cut buoy the public's home buying sentiment? Mr. Wong here said the rates are not appealing at all because he's not optimistic about Hong Kong's economy and property market. This man said he will bide his time as he's expecting housing prices to decline further. Some real estate agents said after the previous interest rate cut, the transaction volume of newly built apartments has tripled, but there has been no marked rebound after the government's scrapping of property cooling measures, including stamp duties. Centerline Property Agency Executive Director Louis Chan said favorable policies over the next 2 months could lift property prices by 3 to 5%. When asked if the momentum will extend to 2025, Chan said it hinges on the next rate decision. But as the Trump administration would likely introduce policies that could stimulate the return of inflation in the United States, that might prompt authorities to raise interest rates, hence ending the rate cut cycle, Chan said.